After this downturn in the stock market, what are you telling your clients, your investors?
Well, we think the underlying fundamentals are quite good with respect to the economy. So we think this is more of a technical event. It's driven by a couple of unusual events, decline in oil prices, which we think is well-founded.
About $85 a barrel right now.
Right, and potentially more. And also the weakness in Europe, which is scaring some investors that there might be some spillover into the U.S., which we don't think happens.
Dan Wiener, what about the concept of risk? Should people investigate whether they have the risk tolerance to deal with investing in the stock market to begin with?
Anyone who is investing in stocks today has to look at both their allocation but also their investment plan. I mean, we haven't had a correction in this market for years now. As of today, we've got a correction in small stocks. We have a correction in mid-cap stocks. The big guys are still hovering at around 7% or so below their highs. If you're an investor in these kinds of stocks and that is what you were doing when they were hitting highs, then you should be putting more money into them now. And I would say if you're willing to be a little bit of a contrarian, you want to go to the places like Chuck was talking about, Europe, maybe Russia, get some very cheap assets, into your portfolio.
Chuck Lieberman, I want to pick up on something that Dan said having to do with allocations in the portfolio. Many people own bonds, fixed income. What are your tips for guiding them if they have those kinds of investments right now?
Well, oddly enough, bonds are the place they go for safety, and the safest bonds, in our judgment, are the riskiest because the interest rates that they pay are very low. On a U.S. Treasury, you're getting 2.25% roughly for 10 years. That's a long time.
So those safe investments may not actually be that safe.
They won't default, but they will go down dramatically in value when interest rates ultimately rise, and everyone expects rates at some point to rise.
Dan Wiener, go ahead. You have some tips, I know.
Say, a 10-year bond is still going to give you your money back after 10 years, but you're only gaining, what, today, 2.3%?
Yeah, the 30-year is at 3%.
Right. If inflation picks up even a little, you're getting nothing for your money.
What about the investment?
And after taxes, you're getting less.
Right, you're going to have to pay tax on it. What about the investment program, the idea that you've got to stay with the discipline, particularly at moments like this?
Sure, because what happens is if you take too much risk in your portfolio, the time that you're going to be selling is exactly the time when you ought to be buying. So you really have to know what is your risk tolerance. If you were comfortable 2 months ago, 3 months ago, and you're still comfortable today, good. Stick with that program. And we've been talking about the fact that we haven't had a correction forever. And I personally am looking forward to seeing a correction overall in the market because I think it brings valuations back down. Right now you're looking at maybe the big sort of old tech stocks as being good values. That's about it. Everything else may be a fair value or a little expensive.